Good morning, everyone. Once again, this is Black Forex coming to you with another market analysis video currency breakdown. Before we get started to break down this currency pair in this chart, we have to state that this video is for educational purposes only. This is not for financial advice, but we all know why you guys are here. You guys are here to find good, credible Forex content that can help improve your ability as a trader and help put some extra money into your pocket. Now, with that being said, let's go ahead and break down this chart. Okay. Now, before we get to talking about what's physically happening on the chart, one thing we always like to do before we dive into the technical analysis is talk about the fundamental analysis, which is dictating the strength or weakness of each currency. Okay. So let us discuss the JPY first, because as you watch these videos before, we discussed the USD pretty repetitively, but for thoroughness, naturally, we're always going to get into it. Okay. Now let's discuss what's happening with the JPY. Now we did not have any JPY news for Tuesday, but we did have JPY news for Monday, and we had moderately more. Did have some negative news, but we had more positive news than negative news, which means that the JPY is still heading in a direction of strength. It is just that the strength is not picking up as fast as I'm pretty sure the Japanese government would like for its currency. Okay. So, but it is picking up strength, just doing it at a slower type of pace. Okay, but the Japanese country does have inflation hanging over it. Inflation is being catalyzed by ever rising fuel costs. So they are dealing with that, but it does look like the Japanese government are taking a tougher stand in combat inflation and its economic woes. Another thing that seems to be having a negative effect on the Japanese government as well is the Russian sanctions, with Russia not being able to trade their goods or their natural resources with other nations. Japan is one of Russia's closest one of Russia's neighbors and one of their closer trading partners. So this is having a negative effect on the Japanese economy because Japan does not produce a lot of the natural resources that they would need for goods, and they do get a lot of these natural resources from Russia. So we are going to have to see how these things play out for the long term, but for the short to intermediate term, the economic interventions and policies that the Japanese government is putting in place to bring back more to uplift their economy during this inflationary time and to strengthen their currency seems to be working, but it's just working at a slow pace. Now with the USD, during Tuesday New York session between 8:30 and 10 o'clock, we did have a lot of news come out about the USD. We had more positive news than negative news come out about the USD. Then also around 4:30, we did have the news come out about the oil, and it seems that we have a surplus of oil in the world, which brought down the per barrel per price for oil, which also strengthened the USD as well, because what that's going to do is bring down fuel and gas costs at the pump. So that cost of gas being brought down means consumers have more money to spend in the stores because they're not spending more money at the gas pumps. More money getting spent in the stores means more money goes into the economy, means that the economy starts to grow and the USD starts to get strength. So basically, we have two currencies that are attempting to regain strength because weeks prior to this one, they have both been our weaker trading currencies, but now they're trying to become our stronger trading currencies. But the ironic thing is that they're both trying to gain strength at the same time. It's just that the pace at which is happening is that the USD is actually gaining its strength much more faster than the JPY, which we can see now. Let's get into the technical analysis. We can see that it's reflected on the charts because the strength was getting gained pretty equally at the same pace. Price started dropping down, but once the Japanese strength gain started to slow down. As we did predict yesterday, we did see a range here and a pickup in price. Okay, so there's several different options on which way the chart can go due to the current fundamentals that's affecting each currency. Okay, now we can continue to pick up to this general area here before we have another swing to the short side, or we could range out in this area here before we have another swing towards the short side. Okay, so once again, we could have a pickup to this general area here before we range out, swing to the short side, or we can range from this area here before we go to the short side, or this is a strong possibility we could drop from this area here, go to the short side, and we're moving to the short side. We could see targeted areas over here or to this area here before we start to see any ranges or any type of up movements happening again. Okay. Now, if you've watched our previous videos, like I've said, you always want to be cautious buying things that have been at all-time highs or been at all high times for a while, or have been at all-time highs for a long period of time. Okay, so this is what I mean by that. The last time the Japanese yen was this high, price was this high with this pair was back in 2005, so that's 70 years ago. So we're at a 7-year all-time high. So typically once we start to get to that type of time frame with that type of all-time high, we are going to see more drop in prices. Okay, so in order for this to truly clear that, we would need to see more of an aggressive push down to about this general area here, then continue to go up if we're going to start making all-time new highs with that. Okay, because you got to think about this from a business perspective. If you want to keep buying, you don't want to keep buying at these high prices. Eventually, the larger players are going to drop their price if they do want to continue to buy this, so that they can be able to buy at a cheaper price and then take the chart even higher. Okay, but for right now, due to the short intermediate term, what we're going to be looking for is probably another push up in price. If you guys are heavy technical analysis traders, this would be because what you're seeing right now is the making of a double top on the daily, right? This would be the first double top. This is going to be around the second double top, and then you'll start to see the lower leg come down. Okay, that's if you guys are heavy on the technical analysis. Black Forex, we do fundamental analysis, technical analysis, bringing them both together, but more heavy on the fundamental analysis because this is what actually creates and moves the charts. Okay, so like we said, we're gonna have a range out. We could have a pickup to this area here, range out, then come down, or we can range out in this area here, then come down, or we can get straight drop in this particular area here. They'll come down. We could get here before we start ranging out, have a pathetic push up, and before we continue down to this area. Once we get to this area, we're going to have to see how this behaves. If we start to see immediately aggressive push towards the long position, that means that this chart is going to continue to go up and start breaking even record more highs. Okay, if the up movement is very choppy, very sloppy, that means we will continue to go down. Okay, hope this information was helpful for you guys. Happy trading.